the RIMC order flow pattern model is not just about understanding continuation phases within the market. It's about understanding when price is contained in a sideways range, the next phase of price after a range breakout always becomes the initiation phase. That's because the market is moving in specific cycles. So when we're in cycles of a sideways ranging market where people say that this is messy market, stay away from them. Actually, if we just apply on some framework to the sideways range where we find the highest point and the lowest point, we can find the areas which are highest probability to look for buys, the areas which are highest probability to look for sells, and the areas overall we want to stay out of the market. Now, this is when the market is moving sideways. Of course, when we move into trending markets, when we break out of sideways ranges, we can also then use structure here, A to Bs, and we can look for those pullbacks for continuations, where we'll be looking for our pullbacks, where we'll be looking for that A to B. We'll be using our premium and discount tool, and we'll be looking for sideways range markets here that have broken out to the upside, and then we can play the point of mitigation for a continuation phase there to the upside. So RIMC is about using the fractal nature of the market to understand when we're in a sideways market, when we're in a trending market, and then we can utilize RIMC in multiple locations. And this really is the power of the RIMC order flow pattern. It's understanding higher time frame goes through different phases, ranging phases, trending phases, and then we go through very aggressive markets where we're just very volatile. And these are normally initiations out of a sideways range or continuations from a previous sideways range, like we see here. When we get that point of mitigation, this is then the continuation phase where we see a very volatile market here. So these are very predictable and repeatable market patterns, but it just comes from understanding that price is going to move in sideways ranges, initiations, mitigations, and continuations. This bullish and bearish order flow pattern that we see in the market repeats on a consistent basis, but it's just about understanding how to trade that on a consistent basis and how to trade that in a repeatable way. And that's what we go through inside the exclusive content. If you want to find out more about the RIMC model, comment RIMC down below and we'll send you over something free to get started straight away.